Well, thanks very much, guys. Yes, as we've been reporting through the course of the morning, the economic survey will be tabled shortly. But of course, our team, Sapna Das, Timsy Jaipuria, Parikshit Luthra, have been working the phones to try and get us an insight on what the survey is likely to say. In terms of growth, the growth numbers, the baseline scenario, 6.5% for FY24 is what the estimate is likely to be in the economic survey. Nominal growth at 11%, that is the estimate as well. But in terms of caution, the survey is going to address the issues of the current account deficit as well as inflation and the global macroeconomic volatility. In fact, the survey will talk about the fact that export growth may have plateaued on account of the current global economic uncertainty that we are seeing, and that could be a cause for concern. Even as far as the current account deficit is concerned, we are given to understand that the survey is likely to say that while for now, if the global macros remain stable, we should be okay. But this is something that requires monitoring. And of course, as we're pointing out there, at this point in time, the survey also suggesting that there are incipient signs of a new private capital formation cycle being visible. So that's the good news there. And again, pointing on the fact that domestic demand will be the big growth driver for India. And of course, highlighting and articulating that it has been, the last year has been a year of resilience as far as India is concerned. And that, of course, has been corroborated by numbers in relative performance to what we have seen globally. So that's really as far as the highlights of the survey is concerned. Focus on domestic manufacturing, the focus on domestic demand driving growth, and of course highlighting also the reasons why India has been relatively better. But of course, as I pointed out, the concerns will be on the current account deficit, on the export growth slowing down. In fact, the survey, as I pointed out, seems to suggest that that will be a challenge considering that export growth may have plateaued. The rise in import costs on account of inflation, that of course is also going to be flagged as an area of concern that requires monitoring and for the government to be mindful of. So those are just going to be some of the highlights of the survey. But remember, this is all source-based information at this point in time. The survey yet to be tabled. Our team is, of course, working the phones, bringing you insights on the economic survey. I will hand it back to you for more on the markets and keep coming back as we get more.
Oh, absolutely, Shireen. Thanks a lot for that. Can't wait to hear what the economic survey has in store. Of course, as we head into the budget, there are a couple of pockets that are doing really well this afternoon. Have to point them out. The entire defense space is on fire as we speak. BEL is up almost 7%. Remember, defense is a big thrust area for the government, and the expectation is that there could be a 10 to 15% rise overall in capex spending across many verticals, whether it's manufacturing, defense, infrastructure. BEL is up almost 7%. BHEL is up almost about 6% L&T, of course, has that bit of an overhang because of its earnings, but this entire pocket, infrastructure, defense, we were speaking to CG Power a while back, and they mentioned that there is a large order wins slated in the railway space, and the government has its huge focus on that as well. CG Power also trending in the green right now. So plenty of stocks to talk about. The mid-cap end of trade is up about 400 points, although the Sensex and the Nifty are a bit cautious as we head into the economic survey. But as we take a short break, here's some exciting news for you. The most coveted leadership awards are back.